Welcome to the GTM Loop. I'm Angi Milano.
And I'm Holly Glowaty. And as always, we are talking about how to build go-to-market strategies that actually work. So real stories, real tactics, and conversations that help you sell it, keep it, or grow it. And on today's episode, we're very happy to have another guest with us, Fabiola Salazar, the VP of Technology Banking at Wells Fargo. So today, the topic is, are you swiping left on your banking relationship?
Very controversial, but so good.
It's so good.
I love it.
I'm really excited about this conversation. We dug into questions you should be asking right at the start, what you should expect, not just even day one, but even like 3 years into the future from your banking relationship. And we talked about the nuances in between. So enjoy this conversation. We think it is a really crucial part to getting you to market as a fintech, making sure that your financial foundation is in place. Joining us is Fabiola Salazar. So Fabiola, thank you so much for being here.
Thank you for having me. I'm really excited to dig into today's conversation.
Absolutely. Well, before we dig in, I'd love for you to just give an introduction to, who you are, what you do, and how you've gotten there.
Yeah. Well, as you mentioned, my name is Fabiola, and over the last decade or so, a little bit more than a decade, I've worked across a variety of functional areas. So I've worked in finance, product, go-to-market strategy, and was even an investor. And about a year ago, I decided to bring my talent and skills to Wells Fargo. I decided to bring my talent and skills to Wells Fargo's technology banking group, where I help founders to proactively solve their banking needs so that they spend their time doing what they do best, which is building their businesses.
Perfect. And this is exactly what we wanted to talk about today, and what makes you such a great guest for this, because even though our audience is fintech, we find that it's just such a broad term, right? So sometimes they don't even know what to ask of their banking relationship, what they should be looking for, how to just set themselves up for success right out of the gate, because fintechs just have so many unique needs, as do many other startups. But so what should a fintech look for in a banking partner from the start, from day one?
That's a great question, Holly. And I forgot to mention that I also worked at Fiserv, so I have a good understanding of what specific needs a fintech company has, right? I always tell fintech founders that they should really look for 3 things in their bank. So number one, the bank should understand where the company is today, but they should also understand where the company will be 6, 9, 12 months down the line. Now, why is that important? That's important because early on, founders don't just need a bank account. They really need to work with a bank that's going to scale with their business model and evolve with them as their capital needs evolve. I also think number 2, the second thing I would mention is that the right partner will bring in fintech expertise. Yes. And if the company is VC backed, right, ideally that banking partner understands fintech and the expectations around being VC backed, right? Yeah. So I definitely think that the right banking partner brings in that additional expertise. And lastly, but just as important, the right banking partner really needs to demonstrate that they're willing to invest time early and often, that they're vested in the business, and that they're looking to be a long-term provider, not just a transactional partner.
Ooh. It's so important, because I feel like a lot of times you're just creating this account and then just like on your own to figure out all the other things that come along with it, like cash management, cash flow in general, any kind of lending that might pop up that you might need. There's so many things that happen as you work through your journey, that a partner that's more like almost like an account manager is so much more beneficial than just trying to do it all by yourself.
Absolutely. I couldn't agree more.
Yeah. I think understanding where someone is and where that company is going is also super important. I mean, I've had my fair share of startups, and a lot of times I'm explaining everything about my business to someone and they're just kind of deer in headlights, Like,
Okay.
So to have someone who gives you that sort of understanding and leg up right from the start, gosh, the headaches that would save.
Especially for fintechs, because that's
Yes.
what we do all day. So it feels like you should have somebody that understands the ecosystem, especially from your bank, because they're in the ecosystem.
Exactly. And the other thing that I do want to mention is that many times I've spoken to founders who engage with their banks, right? And they always mention, hey, I had a question I've been noodling on for weeks. And I called my banker and they were able to answer it in 5 minutes. So to your point, what a founder may only be thinking about once a year or when they're onboarding, for example, a finance team lead, like the banker at the right bank, right, is doing this on a weekly, monthly basis. So they're more quickly able to provide that feedback and expertise to the founder.
That makes a lot of sense. Yeah. And I feel like, Angi, you were just saying this, but I just feel like in fintech, it's just so unique because the regulatory environment, I don't know, just even like the expectation that you understand more than your fintech expertise is sort of there. So to have a banking partner that can explain the pieces that you don't get, I think is a very big deal. It accelerates things for you.
It does. I think it also, it's like thinking through a lot of the questions that you have at the beginning around how to set up all of your mechanisms early so that later on down the line, the conversation you're having with your banker is more tweaking what's right as you grow. That part doesn't happen when it's like a digital only bank or something that doesn't have a customer service arm. Because if I set things up incorrectly from the beginning, I'm just going to keep perpetuating all those different habits along and then find out later on that maybe I missed out on interest revenue or something that could really help me for startup capital or just in general to have a better cash position. I haven't seen this at all.
Never been there. Ever. I did not make these mistakes. Come on. Oh my gosh. So, okay, thinking about this, year one for a startup, I feel like it's just like a roller coaster. So in your opinion, Fabiola, like what should a fintech be looking for? Or I guess what would define, a strong bank fintech partnership for year one of their company?
In the first year, Holly, and this is building off of what Angi just mentioned, which is that sometimes when we do things online, it may not be what ultimately we need to have a year or two down the line. And so working with a bank, right, you can hopefully, if you're working with the right bank, you should be avoiding a lot of the trouble down the line. And so that is accomplished by spending the first year focused on building a foundation of trust and communication. So that means establishing aligned expectations, regular check-ins, and clear communication. Now, I think that founders may be wondering, well, what does this look like in practice? In practice, a good banking partner will help the founder to proactively think through some of the things you just mentioned: cash management, liquidity strategy. Down the line, it may be optimizing working capital and ultimately scalability.
Yeah.
And so just to bring it further to a more concrete example, you can imagine, right, early on, a founder is typically the sole approver, for example, for approving wire outflows. And that makes a lot of sense because it's a small team.
Right.
But as a company grows and new team members are onboarded or a VP of finance is brought on board, that's a decision that should be revisited. And so a banker, right, if there's that trust and communication, would have the opportunity to ask the founder, well, should we reevaluate that approver status and potentially discuss delegating it to your finance lead or potentially adding a second approver? And so these are the sorts of topics that, again, a founder is not necessarily focused on day to day because they are building a business, but the banker is. So that's all to say. I think when the relationship works really well, a fintech can proactively advise the founder based off understanding the fintech strategy and growth plans. Mm-hmm. And on the other side, the founder should feel comfortable giving their banker a call whenever strategic decisions need to be made.
Mm-hmm. Mm-hmm.
Such a better approach, and so much more of like a coaching stance to help them see what's coming down the line that you would know, but they may not know right out of the gate. Especially a lot of our founders are very young, or sometimes they're coming from other countries and they don't necessarily always know the way that our financial system works. It's different overseas, especially Europe. It's much more open. So it's good to have an advocate that is your go-to for decisions like that. The wire, that's a big one. Finding a second approver.
Exactly. Absolutely. And I, when we talk about founders and finding the right VC, right? The metaphor that people use is like this: you're entering into a 10-year marriage. I don't want to use the same metaphor, but it's very similar. You want to find the partner that's aligned with your needs and what you want to accomplish in the future.
I mean, we all know it's very true. People don't move their money away from the institution or their banking unless it's like a very big life event generally. So it's a long-term relationship, whether you think like, oh, I'm just trying this one out. I don't know. You stay, you do stay.
And I think there's one, you just brought up a really good point. It's when you're talking about your personal finances and you're moving money around, it's very easy to have your wealth accounts in one place and your bank account in another place, all those things. But when you're talking about a business account, it's moving large sums of money. You can't just move $20,000 and no big deal. Then you're going to set off all different kinds of regulatory red flags and things like that. So it's not easy to move banks, which is why it's important to get it right out of the gate.
Absolutely. And then not only that, Angie, but also when it comes to making it easier for your team to do, specifically the finance team, to do the reporting and reconciliation they need to do, like switching banks is difficult for them. And so the right banking partner, right, will make that accountant's life easier, such that they're able to do their job more quickly.
That's so important. I'm still closing out my books from last year. Fabiola's going to break out into hives right now. Don't say that. But it's true. It's just me, I'm the only one. I'm doing everything.
I mean, we live this, like these things that Fabiola is saying. I'm like, oh yeah, it's hard.
Yeah.
So one thing that I think we've all talked about either together or separately or something is, I do want the fintech capabilities of those kind of online only neo banks, but I like the comfort of a larger established institution like a Wells Fargo. What do we suggest there? Like, is there kind of like a best practice, do you think, when you're looking for those things? Do you lean one way or the other? Like, I guess, because I think especially being in fintech, some people are like, well, I just want the interface to be easy to use.
Yeah. And I'm gonna answer this question. We may decide to.
Okay, great, fair enough. I know I'm staring it at you.
Look, I think that it's helpful to have relationships with multiple institutions, right? And we've been drawing parallels on how we think about our personal banks. I believe that companies should do the same thing, right? When they're thinking about who to go with. Long term, however, if we think about the two things we discussed, which are establishing the right foundation and working with the long-term partner, I think ultimately, I think that founders will conclude that the working with someone like a Wells or another established banking partner may be better suited for their needs.
Yeah.
But I also understand that founders sometimes don't have a lot of time to do the upfront work to conclude that. And so that's where neobanks come into the conversation, which is why I think it's important that founders establish channels of communication with the banks before they have a banking need.
Yeah.
And that they invest in that relationship so that they can work with the best from the beginning.
Yeah, I think that makes sense. And, it kind of takes me to the next question, because it's like beyond just holding deposits and having these clear lines of communication and maybe seeking advice. What other support should fintechs be looking for from their bank? Is there anything else that you think is important that maybe they're not considering right away?
Absolutely. And I tell founders, you should absolutely expect your bank to be a strategic resource. Like full stop. It needs to be that, right? The other thing I'll say is that fintech should expect their bank to save them time and money. And the way a good bank does this is by taking things off the plate of the founder so that the founder can focus on building the business. And to my earlier point, right, the banker has a robust knowledge base from working with perhaps potentially other fintechs, other verticals, other size companies. And so they have the ability to bring that knowledge base to the founder, right? And so that is one part of the strategic support that I think a banker should provide. The other area where I think a good bank can help is in opening doors, whether that be to other investors, to other founders who may be further down the line, for example, or ecosystem partners, such as, hey, I'm looking for my first finance hire. Do you have a name? And so the bank should absolutely jump in and help from that angle as well.
That's like a really good approach, because I feel like it becomes more of like an advocate and an advisory relationship than just the transactional, I'm going to call Fabiola because I don't know how to do something. Because I don't know what's the best product for me to get into to accomplish XYZ. The idea of hiring, especially, it's so attractive for fintechs, later stage more so than early stage, to hire people that come from banking or come from another larger ecosystem, especially when they're looking for advisory or board seats, things like that. And that's a great stance to take that would set you apart.
And that last point around the finance team members, I mean, I've seen some of our bankers have deep relationships with what I call serial CFOs, which are just a fantastic resource, right? They start in one startup and they move on to the next one, and they have a playbook. So the bankers have connections with all those points, Angie, as you've mentioned.
It's super important.
Kind of building on that same question, are there services, in particular things like Angie and I talk about treasury, especially for early stage? It's kind of hard to find that sometimes, but like, are there any services in particular these fintechs should be looking for from a bank?
They should absolutely be looking for treasury management. And then in my experience, early on, founders are very, very focused on how do I get the most yield from the money that I have. And so, which makes sense, right? Because for them, sometimes that additional amount of revenue can mean, hey, I can hire an additional contractor. Exactly. Or I can pay someone's salary. So baseline treasury management, absolutely, right? And then the other thing that a banker should be able to help them think through are things like the controls, which we talked about earlier. Who has the ability to wire and send money out of the business, right? As well as things like optimizing working capital, which happens a little bit further down the line. But how do we help the company think through getting paid faster and them having the ability to pay a little bit later? So a banker can definitely help them think through some of those things.
Really good point. I feel like that is crucial. That's like the one differentiator of banking versus like actually participating in your own growth.
That's a good way to put it. No, I agree. I think it's kind of, I guess it's to the point that we were making early on. You can be in fintech and not know that certain things are available to you. I know so many people that have no idea to ask for treasury management. They just, it wouldn't occur to them. They're like, just hold the money.
Yeah.
You know,
Well,
let me pay people and get paid.
Yeah, there's also this idea that like if you want to have a treasury management solution, you have to have a ton of money in the bank. A ton, like millions. And that's not always the case. It's coming down. There's much lower thresholds. So your banker is going to be able to tell you that and maybe work out a plan for how to get there if you're not at the threshold yet. That's super important too.
And on top of treasury management, I would also be remiss if I didn't mention that there are also programs for payment acceptance. There are programs for company cards, right?
Yeah.
So there's a lot of additional resources that, again, if a banker knows where you're going, they're able to bring forth a lot of that knowledge and put the right resources in front of the founder. Again, it's not the founder's responsibility to know our capabilities. It's the banker's responsibility to know and advise that founder.
I mean, we say this a lot. People have probably heard this. It's like there's having a vendor and then there's having a partner. You know, this is where you get the conversation, as you've been saying this whole time. But yeah, you don't know what you don't know, right? I mean, I feel like that is like 50% of running a startup is like figuring out what you do not know, hoping someone can help you through it. So I do think like I'm really glad you said that, because otherwise a founder could spend tons of time trying to research everything, not finding the answer, not knowing where to look, but picking up the phone and talking to an actual banker could speed that up and could make you feel a lot more comfortable. I think I have only like one or two more questions for you, because I feel like we've covered a lot already. It's making me want to go rethink some things even.
I know. I'm like, can we chat after this? No.
Know, right? Okay. So I feel like we've touched on this a little bit, but I want to understand, like, do we have key questions every fintech should be asking before they sign with a fintech or with a banking partner? I know we've kind of said a few of them, but maybe to make it a finer point of it.
So there are, and you're absolutely correct. The way I'm thinking about this is that based off what we discussed, I think there are some really good questions that can help founders to uncover some of the things we've discussed previously.
Yeah.
I think the first question is plain and simple. Does your bank have experience? Does the bank, have experience working with fintech and venture-backed companies? Number two, can this bank scale and grow with the business? And then the other two questions that come to mind are really focus on the relationship, right? Going back to what we talked about, coaching and advising relationship. I think founders should ask the bank, who are the day-to-day contacts and how accessible are they?
Yeah.
And then lastly, what does the relationship look like today and what will it look like 2 to 3 years down the line? And so these questions will hopefully help founders to understand whether their bank can support the business growth and their specific business model, But the last two questions are more focused on the relationship and how that partner will help them to grow the business long term.
Yeah, I love that.
Way to frame it.
These are very helpful questions.
Mm.
Well, this is a really great conversation, Fabiola. I think, I think people often assume getting to market is just having the product, having the marketing in place, having the sales motion, but it's also having this foundation level set up so that the rest of your operations can run smoothly. Because if you can't get money in or out, and do it in the most efficient and beneficial manner for your fintech, you are going to have so many problems. So, it's just, this is a really foundational piece. And I think it often gets overlooked. So I'm really glad we were able to have this conversation today. I think it'll be really helpful for a lot of founders out there.
And it's so nice to have another Latina on. I love it.
Yeah. Well,
I do too.
That's true. Well, I had so much fun talking about this topic with both of you. I know founders don't like to think about this, but I cannot emphasize like how important is that founders utilize and call their bankers. Like the right partner will be there, throughout their journey, and like we mentioned, save them time and money.
If a founder is looking for their first banking relationship, how do they get a hold of you? What's the best way to reach someone like Fabiola at Wells?
Well, you can find me on LinkedIn, or you can email me at Fabiola, Fabiola .Salazar, Salazar @wellsfargo.com.